Let's say there's an AI that never gets a stock market prediction wrong, not a single trade. It knows which stock will rise tomorrow, which company will collapse, which sector will explode. All of it. Sounds great, doesn't it? But wait, because this scenario starts with everyone wins and ends somewhere very different. Let's put the numbers on the table first. As of 2024, the total value of the global stock market is $126.7 trillion. The NYSE's average daily trading volume is over $80 billion. Every morning, millions of investors, thousands of algorithms, and hundreds of funds move that money with different predictions from each other. And that difference matters because the stock market is fundamentally a disagreement machine. One person says this stock is cheap, another says expensive. They agree and the trade happens. Price is born from that disagreement. Now, you introduce an AI that predicts with 100% accuracy into this equation. What do you think happens? Everyone using the AI wins every trade. The word spreads, more people start using it, and right here, something strange happens. If everyone knows the same prediction, everyone wants to buy the same stock at the same time. But to buy a stock, someone has to sell it. No seller means no trade. The price instantly spikes, and that profit opportunity stops being an opportunity because everyone already knows. Economists call this arbitrage collapse. An advantage stops being an advantage the moment it becomes perfectly known. Compare this to the 2010 flash crash. That day, algorithms locked onto each other. The Dow Jones dropped roughly 1,000 points in a matter of minutes, and $1 trillion briefly evaporated. That day, nobody's AI was 100% accurate. Now imagine all of them making the same decision at the same time. A stock market only works if there is uncertainty. When uncertainty disappears, prices can't form. And when prices can't form, the market can't function. Nobody sells because the price will rise tomorrow. Nobody buys because it will fall the day after. Trading volume approaches zero. The market freezes. And a frozen market also destroys companies' ability to raise capital, investors' ability to distribute risk, and the economy's ability to direct resources toward productive areas. Now, governments step in. The SEC, European authorities, central banks all face the same question. Should we ban this AI? But even if banning the AI is possible, stopping the person who built it is much harder. That person keeps using it in secret, while the rest of the market is still moving in uncertainty. One side knows everything. The other side knows nothing. This is no longer a free market, it's a game with a predetermined outcome. And now let's get to the real question, the question we've been holding back since the beginning of the video. Who holds this AI? If a single person or company holds it, they possess the most powerful financial weapon in the world. They win every investment decision, systematically crush the competitors, and over time accumulate enough wealth to buy the market itself. At this point, we're no longer talking about an investor, we're talking about an economic sovereign power. What if a government holds it? That government predicts rival countries' markets too, moves within them, and crushes them whenever it wants. This is no longer finance, this is financial warfare. In conclusion, an AI that predicts with 100% accuracy doesn't fix the stock market, it destroys it. Because the stock market is the collective prediction of millions of people trying to make the right decisions inside uncertainty. When you remove that uncertainty, what's left? Depending on whose hand it's in, either the fairest system or the most dangerous weapon. And before you ask that question, you need to ask this one first. Who trained this AI? With whose data and for whose benefit? Thank you for watching so far. Subscribe for more.